Welcome back to Hot Issues, and we are in conversation with Mr. Kingsley Kwame Awuah Darko, who is the boss of BOST, and we are talking about all the operational problems and prospects of the company. We're talking about how the strategic reserve can be used to stabilize prices. Now, isn't it just possible also that if you had sufficient stock, then you may not have to buy at a time when your exchange rate is messed up, or at the time when labor agitation in Nigeria, for example, has hiked up the prices and so on?
Very good points. Petroleum works a little bit differently. So, petroleum prices, refined product prices are largely determined by the European market, and their prices are largely determined by their weather conditions. So in winter, you have a situation where petroleum prices shoot up, and round about now, there's a 3-month period in the year which starts from March, April, May, where prices really go down. Unfortunately, we haven't seen that cycle reflecting in the domestic prices. And there again is the supply and demand challenge. Unfortunately, petroleum is also a little bit more complicated than just the foreign exchange prices, because there's a cost to financing it, there's a cost to storing it, and it's part of a massive supply chain. You have to understand crude oil moving from sources to various refineries, those refineries processing, those refineries having to move them either into tanks and pipelines where traders acquire, put them on ships, float the ships to various parts of the world, bring them into countries like Ghana, and then they go into storage tanks, and then they go. It's a massive global supply chain. So the industry is extremely complex and extremely sophisticated. So it's not a function of just the forex and so on and so. There are so many other factors. One of the things that would help Ghana, now that we are an oil producer, would be the revamping of TOR. If you had Tamale Refinery operating at a certain capacity, that would be the best strategic source or security or comfort for this country. TOR has had problems, but who doesn't? And I believe that we must face up to the challenges TOR has. It's got this huge debt sitting there which nobody really wants to look at, but we must face up to those challenges, address them, and solve them. If you look at some of the problems that brought TOR down, under recoveries, forex losses, and so on and so forth, when TOR stopped functioning properly, it was the bulk distributing companies that stepped in to fill the gap. The bulk distributing companies at the moment have the same problems. Under recoveries in excess of, I think, 300 million, of which some has been paid. Forex problems, the last document I saw, they have some forex losses that they are claiming from the government, and so on and so forth. So the real problem is how we've structured our downstream supply chain. And whoever is in that mix or that supply mix, be it the BDCs or TOR, ends up suffering because of the misalignment that we have. So I think a lot of people sitting up and blaming the refinery, and so it does have its own problems. It needs to be upgraded and so on and so forth. But there are some industry-wide problems that affected TOR, that have affected the BDCs, and there are serious talks to resolve some of these problems. But our best security is to be able to manage a closed-circuit supply chain. We are producing our own crude, we can refine some of it, and we can supply our own market. I mean, the import bill, I understand, for petroleum last year was in excess of $3 billion. If those $3 billion had gone through our own facility TOR, there will be some dividends available to the taxpayer, and so on and so forth. Our institutions must be made to work. I believe personally, and this is one of the challenges I've thrown to the management and the staff, that yes, Boss is a state-owned company, but it must be able to be profitable, it must be well managed, and as I said, our goal is to be the number one company. Companies in this country have done it before, manned, operated, and owned by Ghanaians. I don't see why Boss won't be able to do that.
Your well-known, storage facilities, best-known storage facility is the one at Bupe.
Okay.
How come? Do you have others?
We have several facilities. In fact, we have 6 operating depots. We have the Accra Plains Depot, which is at the Pone Barrier. We have a facility just across the Volta in a place called Mame Water. We have a transit depot in Akosombo, which we use to move products into river barges. These barges now float all the way to Buipe, which is one of our major junctions. And then we have another facility in Bolga. Accra Plains
What about Kumasi?
And we have a facility in Kumasi as well.
Oh,
so that's the 6th one. Our Accra Plains depot is connected by a pipeline to Akosombo and to Mame Water. And then our Buipe to Bolga facility is also connected by a 267-kilometer pipeline. Massive infrastructure. We have river barges, we have tugboats, we have our own dry dock facility in Debre to maintain these facilities. And we are developing a facility in Takrady, in Pumpuni. Boss has acquired 300 acres, where this project involves a pipeline from the gas processing plant in Atuabu, so that we can have LPG storage included into our product offering. And then we're going to have another 200,000 to 300,000 metric ton petroleum storage facility with a SBM and a jetty facility in Pumpuni. So, as I said earlier on, we intend to double our capacity, and we intend to include LPG into our product offering over the next 2 to 3 years.
Now, initially, there was talk about using the Volta River to transport, bulk supplies and so on. What has happened to those dreams?
They are dreams, and some of them are actual reality. But there are a couple of constraints. So, for example, when we did our network planning, when I came in, we tried to understand what we need to have moved across the country. Mm-hmm. You go all the way to Buipe, and you find out that we are projecting to have about 50,000 tons sent to Buipe every month, because we need to supply the Burkinabes and the Malians with 20,000 tons. The barge capacity we have on the river, there are 6 barges, of which 4 are functioning. Mm-hmm. If you push all the barges into the mix, we can only do 16 to 17,000 metric tons in a month. So barge capacity needs to be increased to go up to the 50,000 metric tons we're talking about. But in the meantime, 17,000 goes by barges, and the balance of 33,000, 34,000 metric tons has to go by BRVs or tankers. So this is what I mean by several bottlenecks and logistical
Putting
constraints.
Additional pressure on our roads.
Putting excessive pressure on our roads. In fact, Bost has the lowest cost route to the Sahelian market. And it's a massive inheritance from Nkrumah, because he built the lake. And that lake is so underutilized. In fact, 2 weeks ago, I had the privilege of going up north to visit our facilities and so on and so forth. And honestly speaking, one of the major mandates of the VRA is to manage and to develop this, not just power generation. Of course, it's focusing on power generation per se. But that lake has huge economic potential, which hasn't been tapped.
Would the improvement in rail transport not help your work?
Phenomenally. We have our depot in Kumasi, for example. If we had a railway facility operating, we'll be able to deliver products by rail into our Kumasi facility. If you look at the transportation mix, pipeline is the cheapest.
Mm-hmm.
The second is river barges. The third is railway. And the fourth is tankers or BRVs, bulk road vehicles.
Mm-hmm.
So in order, and this is why I keep saying a functioning BOS will lead to price stability, because if we operate efficiently, there's a certain element in the price buildup of petroleum products called the primary distribution margin.
Mm-hmm.
We've recently had to increase it, or the NPA has recently increased it, I think from 4 pesos to 6 pesos, and so on and so forth. If we had the system functioning, pipelines working, railway working, barges working at capacity, and then utilizing the BRVs or the tankers as support, you'll find out that that rate would eventually come down, because the highest cost element at the moment is the one that is moving the majority of the products across the system. This puts pressure on our roads, and it puts pressure on our pricing.
Mm-hmm. Recently, there have been some controversies. The contract with TSL.
Yes.
What's the background to this contract?
It's very simple. When I became managing director of BOST, I wanted to understand the company I was supposed to run. So I read board minutes from the year 2000 to the year 2013. And I discovered that we had a problem in the operations called product losses. Product losses is something that has bedeviled BOST from its inception. Now, what do we mean by product losses? Product losses means that when we take products into our system, while it's under our management and while it's under our control, we are not able to account for what has been given to us, either by theft, either by poor quality of products we receive, leading to higher evaporation rates, and it's just, or either by some other means or the other one can't really fathom on. And you discovered, when we did the analysis, specifically focusing on the period 2009 to 2013, the BDCs had come to us and claimed $54 million of products they had brought into our facilities.
That was the bulk distribution companies.
Yes.
Okay.
That they had physically brought into our facilities that we couldn't account for. I mean, that is about a whole ship of products. We did our own internal analysis and are settling on a figure of about $33 million. Out of that $33 million, we found out that 2/3 occurred in our depots and 1/3 occurred in transit. So, two things. You need to understand how to fix this problem. Now, the problem comes from depot management or inadequate management of our depots. What are these processes that have cost us this? For example, I was surprised to find out that our depots are operated without any standard operating procedures. A culture of lack of accountability was in place. And I remember when I went round the country talking to the various staff at the various depots, I said to them, I have 2 words for you: Ghana Airways. And people were struggling to make the connection. And I said, I have 2 words for you for Ghana Airways, because it's a very simple thing. Ghana Airways wasn't killed by one person. It was killed by all of us. You buy an economy ticket, you find a way of getting yourself upgraded. You are carrying 120 kilos, you find a way of getting it being reported as 30 kilos. So many things that one particular individual can't account for. And that's the culture we had in Bost. So we had two challenges. One was to bring in some technical skills and depot operational competence. And the second one, which was the most difficult, cultural change. Because if you don't change the culture, if you don't change the attitude, you can buy all the expensive terminal management systems. The people will not let it work. So we had people coming up with ideas, let's install flow meters. Flow meters had been installed in Bost before, but they've never been allowed to work. So we looked again at the history and realized that one of the previous managing directors of Bost, Mr. Adoyobo, had recognized this problem and had gone out in the market and found a company to operate these terminals for the company. For some reason, that contract wasn't operationalized. It was assigned and everything. So
that was a management services agreement.
Something like that, a management services agreement. So we looked at the situation and said, we can't experiment with this company because of the position it finds itself in. If we say we are going to experiment, we're going to end up doing a big capital expenditure, which may or may not lead to the results we're looking for. So in terms of all the risks that Bost was facing, one particular risk we cannot manage, we have not been able to manage over the last 13 years, is the risk of product losses. So in the interim, we need to transfer that risk out of Bost's hands into a professional terminal or depot operator. We looked at several opportunities. We went through an elaborate procurement process. We had companies from Spain, South Africa, Dubai, China, Nigeria, and so on and so forth. And we found TSL's proposal to be the best.
We will leave it here and take a short break. And when we come back, we'll continue exploring the agreement with TSL. But obviously, you were not just transferring risk. You were also transferring profits. You were also transferring many other things. So when we come back from the break, you would answer these questions. Yes. Short break. Welcome back to Hot Issues, and we are looking at Bost, the bulk oil storage and transportation company managed by the young and very articulate managing director, Kwame Darko. We're talking about what you were transferring to TSL.
Yes.
A lot of responsibility, some cash as well, because they are working for pay, maybe
Correct.
profit, and so on. Why TSL?
TSL because when we did the analysis, they operated in an environment very similar to Ghana. You know the complexities and the challenges of Nigeria are far more difficult than Ghana. Now, we also decided that because we want to avoid a conflict of interest, we wouldn't let bulk distributing companies that have similar facilities to Bost be part of this process. We needed a company that was specifically focused on terminal operations. As I indicated, there was a signed contract with Sahara Oil to operate our terminals. But Sahara, since signing that contract, had also gotten a BDC contract. Now, Bost is an open system. All the BDCs use us in the zonalization policy of the NPA. And we charge them fees for that usage. And they are commercial fees. So if you allow a BDC or a group of BDCs, Ghanaian companies, domestic BDCs, to operate your facilities, then effectively they would have an advantage over their competitors. So I approached the management of Sahara and I said to them, this principle will give me problems. You have a contract which effectively, if we just throw you out, could lead to a judgment debt. We want to avoid that. You are now established in Ghana, you do business in Ghana. Would you be so kind as to let go of this contract so we can relook at the whole process, making sure that BDCs or BDC affiliated companies are not the ones in charge of operationalizing our depots. After a bit of grumbling, I think they gentlemanly they acquiesced and allowed us to terminate the contract. And then our search went on, and then we finally settled on TSL.
But TSL is described as a subsidiary of a Nigerian company. What is this company?
Okay, TSL Logistics Ghana is a subsidiary of TSL Logistics Nigeria.
Is not involved in bulk distribution?
No, in Nigeria, they do exactly what they are doing in Ghana. They manage petroleum terminals. They are a terminal operator. They are not an importer of refined products. They are not a trading company. They just focus on managing terminals.
But why would you hand over the management of your national strategic stock to a foreign company?
We haven't handed over the management of national strategic stock to a foreign company.
What have you done, sir?
Very good. Our terminal operations, which is the handling, the transportation, the storing of our depots, are managed by Ghanaians. But there are some technical aspects, there are some operational aspects that we don't have the expertise yet. So we found a partner which is bringing in that expertise. Of course, we are paying them, which is training our staff, and we are going to do this on a pilot basis for 12 months. Why on a pilot basis? Because we recognize the sensitivity of this, and we as a company or we as a management haven't done this before. So we wanted to go into it on a gradual basis, understand the challenges that it may throw at us, so that by the time we decide to either go into full contract and so on and so forth, we'll be doing so with more knowledge and less ignorance.